All right, good afternoon, traders. So look, not a very active day, I would say, per se. For GJ, I will say that it seemed to have pretty much moved in a range for most of the day. But look, that's what the market does. If you look at the market, it ranges majority of the time. Not very often is it really trending in any one direction per se. That's why you got to kind of, doing your analysis and everything and kind of be on top of the market. But I wanted to do a quick video for you all, just to kind of show you a lot of things. One of the big things that I see, traders, including myself, struggle with is, when to place a trade. When is the best time for me to get into the market, for a trade, buy or sell, right? I've done all the analysis, and I still feel like I got in the trade too soon, or maybe too late. And absolutely all of that stuff is right. You would be right if you said that you felt like you got in at the right time. And that's the thing with the market. Like, we, again, like I always say, we don't predict the market. We cannot predict the market. What all we can do is react to it. So with this particular video, what I wanted to do is just kind of give you a visual, and a tip on one of the ways that I enter the market, and then tell you why, and kind of go through that, and you can decide for yourself. Try it out, to see if it's a technique that works for you. Always try things out in demo first, before you try it with your live account, to get that confidence and comfortability with placing your trades. But I think this is one of the more important topics, in trading, especially with Forex, is timing. Timing is everything, but it seems to be one of the most difficult things to really get down, in this Forex thing. And so I just want to give you a tip. Again, nothing we do or say is going to be 100%, or is it going to work 100% of the time. But what we aim to do is to minimize the risk. That's what you want to do when you think about placing any trade, is, again, risk to reward. Make sure you're doing your risk to reward analysis, or what have you. Again, making sure that, you stand to gain more than you stand to lose, one, and then that the trade that you're putting in is a high probability win trade. If not, then you probably shouldn't put the trade in. You want to put your trades in with all the confidence in the world. That does not mean that it's going to go your way 100% of the time. But if you're doing those things and you're making sure that you're watching your risk, and everything, then more times than not, you'll end up on the right side of the market. So without further ado, here we go. Let's get into it. You can see my screen right here. All right, so for those of you that follow my channel and listen to, me run my mouth, you know that I typically like to watch the market, GJ, specifically on the 4-hour time frame. This time is no different. So what I wanted to show you was one of the things that that kind of gets traders a lot of times, is, when we talk about support, and resistance, or supply and demand, and all of that good stuff. A lot of times I notice that traders, don't use them quite properly, or nobody really explains it to them. And then this goes hand in hand with breakout strategies and breakout trading, right? So I wanted to show you, as the market is kind of doing it real time right now, right? So here's the deal, right? So this is the 4-hour chart. We're going to look at the lower time frame so you can kind of see it, a little bit differently, from a different perspective. But what happens is most traders, right, they're going to say, okay, price is rejecting this support, so it's testing this support as resistance right now, obviously, right? So the actual 4-hour resistance, it already tested it and bounced off and rejected, right? Then so basically what it's doing is testing this support, but it's testing the back area or the upper price, upper value area of this support area. Again, that's why we look at these things as areas, not one specific price line, but an entire price area where there's heavy trading activity, right? So basically, what's happening is price came up and tested the high side of this support as resistance and rejected off, right? And so a lot of times what traders do is when they start to see those rejections, right, they get into the market, right? When you see when you see this stuff happening right here, all right, price came down, and surely this candle right here, I guarantee you, probably when this one was forming right here, a lot of traders got into this market, right? They probably got into a sell trade, and then look what pretty much happened to them on the same candle, and then on the very next candle, right? And then on the next candle, price kept going up a little bit, right? So a lot of traders probably got stopped out trying to trade this breakout or what they thought was a breakout. So look here is the key to trading breakouts. The key to trading breakouts is no matter what time frame, this is what you want to look for. Is you're looking for a price to break out and close. You looking for the break and the close. So what you want to do is you want to wait for this candle to close below your resistance area. You want it to close. When you get that close, that's what is considered a breakout candle with a higher probability. Not 100%, but you have a higher probability when you have a candle that closes beyond the breakout area, right? Not one that just peeks his head out, right? So price came all the way down here. Oh my gosh, I'm getting in the market. It's a breakout, right? And then what happened? What happened? You ended up getting stopped out more than likely, right? And price moved against you. And you're like, oh my God, Forex is trash. I can't do this. No, 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 no. That it doesn't mean that. You were right. You were probably right in your analysis, but your timing was probably off. And again, there is some manipulation in the market, and you have to be aware of those things. So to protect yourself, one of the things that I want to give to you or tip is to wait for the candle to close. Wait for you get that close outside of your breakout area. Then what happens is, so you talk about break and retest, right? So there's a few types of retest, but you're gonna typically what you want to do is you want to wait for the immediate retest. So sometimes price is going to keep going, right? And still you want to wait for the retest of that, but sometimes price will come back and immediately retest this area. It'll come back and immediately retest this area. This is the perfect time to get into that market. This is the perfect time to get into a sale when price comes back and retests the breakout area. It comes back, and see, now what price is doing is it's testing this form of support as resistance. So it's testing the bottom level of this support area or now resistance, right? So now that it's testing it, you see we're starting to get that rejection. So what's going to happen is because price pushed down, right? you know these positions, because there's positions here, right? Especially when big money gets into the market, or smart money, right? When they get into the market, they got some positions that they're trying to capitalize on. So these areas now, this area now, so what's happening is this area is being tested as um, a area that is protected. It's being tested as a protected area, and if it holds up, again, if the smart money want to protect their positions, they're going to protect this area right here. They're going to protect this area and add to their positions, therefore continuing to drive the market down. So you're obviously going to have those that's going to continue to try to drive the market up, but for the most part, if smart money doesn't want the market to advance any higher, then these areas and this area is going to be protected very well. Again, high probability trade setup right there. You wait for the break and then the retest. Now, the other type of retest that we really look out for is when you get a couple of candles, that fall outside of this it is going to be resistance at some point. Fall outside of this area right here. You want a couple of candles, even on the 4 hour, right, that come out and then come back at some point to retest it. Then at that point, you're looking at if you get the retest and you get the rejections, you're looking at even bigger move to the downside. Those are the ones that you really, really want. This one right here, again, not a bad sell setup to get into because we're looking at a protected area. One, it's late in the day, so not a lot of volume in the area. There's potential for it to still, push up a little bit. The probability right now isn't as high as it could be earlier in the day or when we have the overlap of the London and the New York sessions. But still, not a bad, not again, we still have some probability that puts us on the winning side of this trade, but just some things to consider that it's late in the day, not a lot of volume, things like that to really, really get a good gauge as to what price is going to really do or what have you. So you may get this close as a doji or indecision, however you want to call it. But you want to look to see again, looking for the next trade setup for GJ. You want to look to see if this area is as protected as it seems to be. Okay. Again, this is just a tip that I use to decide whether I'm gonna get into a market and put a trade in. Again, I look for high probability, high value trades. Again, where my risk is as minimal as possible. I don't know how many pips you're going to get out of this, but I will tell you, here's some potential though. Here's some potential. If you get in this trade, let's say you got in right now, there's some potential for this to go to about right here before you get some type of reaction. So you can roughly get about 40 something pips out of it before you get some type of reaction. So that's roughly a 40 something pip trade or more, right? So I want to show you what this looks like on the hour. All right. So this was the breakout candle right here. This one right here. So 1 hour resistance, right? Which this whole area right here is the 4 hour support, which is going to be resistance. But again, so the 1 hour resistance, we had the break, right? We had that breakout, and we got that close. This is where we got the close, right? We got the close right here. Once that candle closed, now you see that it's coming back and testing that area, and you can kind of see the action that's going on right here. So price is basically bouncing off of this 1 hour support area right here, right? So this 1 hour support area is where price is currently bouncing off of. But like I told you, we got potential for price to come down here before you get a real reaction when the market opens back up and we have additional sessions for this market. Or what have you. But this is what it looks like, right? So you had that rejection right there. Price continued to move. It kind of did a little dragonfly doji right there. We got some rejection off of the high side of this 1 hour support area, right? We got that rejection. Of course, it's a protected area, or what have you. But those that control the market decided that that's not what they wanted. They wanted price to continue to push down. So therefore, on this 1 hour time frame, we got a big push to the downside. Again, watching what's going on in the market. That's price action. Watching what's going on right now, right? So again, with that being said, opportunities for you to get in to the market and place high value, low risk trades and capitalize and get a couple of pips. All right, so I hope this was informative and helpful to somebody. If you have any questions, please feel free to put them in the comment section of the video. Like, subscribe, and all of that good stuff, and I'll continue to bring some of these tips and tricks to you as much as I can. Good day and happy trading to all of you. Thank you.